The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman here. This is the Tiger Technicians Hour on this December the 8th, Wednesday. And just before we go any further, I do want to say our deepest sympathies and prayers go to one of our denners, a long time denner, and someone who's actually done almost all the Chapman Wave courses. And he lost his father last night, and our deepest thoughts and prayers go to him and the family, and we really wish you well. And yeah, it's very sad when that happens. We're looking at the Dow up 39 at 35,758. This is a very strong, I'm still calling it a great leg A because we've got to wait for the end of the day. Yes, the MACD did cross positive. The 9-period moving average hasn't crossed positive yet, so this is still a work in progress, having gone right down to the 200-period exponential moving average and had an absolutely spectacular 5 sessions from the low of 34,022 to today's high of 35,840. You have to say that 1,800-point rally just boom like that takes out all that negativity that we had for 2 weeks in a single blow to the upside. How it's sustained, I'd say to subscribers, I'm anticipating on this 4th day of the rally, after 4 days of rallying, this is the day that I usually expect either a small doji candle or a weak close, and how deep the pullback is going to be determining whether or not we've begun a new buy signal to buy mode, or whether or not we're just going to consolidate and start a slow lower highs and lower lows scenario. So far, when I look at most of the Dow stocks that have participated, this is very good action. Do not want to deny that. And what we are looking at here is the S&P. Let me just give you this. So the Dow is up 0.07. The S&P is down 0.04, down 1.59 at 46.85. Also a very strong move. No, it's very interesting. In 3 days, because it made a low, the low was on the 1st. The low was on the 3rd. And it went to 45.95 after the 47.43 all-time high back on the 22nd of November. Now we've got a rally that is extremely good looking. We went to today's high of 46.98. Is only 50 points, less than 50 points from the all-time high. That's like 500 Dow points. But at the same time, if you look at the weekly chart, how the weekly closes on Friday is going to be so important. Thus far, well, let me do this quickly because I wanted to do it in the update at the 10 a.m. update. I forgot, and I almost let it go by right now. I'm going to do it this moment. Look at the VIX index, 35.32. Leg D goes to peak D, COVID Fed. You can go through every one of these in the weekly charts. Every time we went into the high 28s back in the week of the 14th of May, high was 28.59. Then it pulls back, and then you go to those highs that were made back in July in the 25 area, and it pulls back. And then you get to that very sharp move up. And the 24th, the week of the 24th of September, 28.79, the volatility index, the VIX, the VIX index, volatility index, pulls back again to the 15 area. And then what does it do? Just last week, it screams to the 35, 32 level. And then what happens? It's trading at 22. I have to tell you, under every condition that I look at, I have to consider that the volatility index signaled 4 days ago. You remember when it was up in the 32 area, I said, wow, wouldn't this be perfect for my subscribers? We should short the UVXY and maybe buy puts. We didn't do that, but what a move. It's gone from 35 to 21. That's 14 points. It got almost cut in half. That's incredible. And that's just saying to me that we've seen an internal low. Whether or not we have to wait for a retest now we go back to the market. Let's go to the S&P. That's what we're talking about. The VIX is based on the NYA, the New York exchange. Doesn't matter. But in the meantime, for the S&P to signal that this is just a bounce by Monday, this coming Monday, at this time when I'm doing my show between 10 and 11, if the S&P has closed, actually, I'm not even going to say that. If it was spiked underneath 46.28, the 9 and 14 period moving average, which is just about to turn green by crossing positive, it hasn't yet done that. But if we close underneath that, that's going to suggest just a bounce, and we have to wait for the residual low. But as we're looking at it right now, this is, can you imagine you go to sleep on the 22nd, is at 47.43, and you wake up this morning and you say, oh, not bad, just a little bit of a pullback, 46.86, I can handle that. Well, look at that sharp pullback and the rebound. That's why this weekly chart is going to be so important. Why? Because if we take out the 47.43.83, we don't even have to close above it. We just take it out. I have to consider that's not just an alternate count, G/C. It's probably a C, and the top of it was made back in the week of the 3rd of September at 45, was in fact a peak D, and the low that was made right there on the week of the 8th of October at 42.78 was the start of a new move to the upside. The technicals are not indicating that in the MACD and stochastic, but look at the 9-period moving average, how high it is above the 14. That's the reason we've gotten out of all our short positions. I'm a little upset. We just got stopped to the penny overnight in our short, the QQQs. Yes, we made money, but we had much more on the plate, but we gave quite a bit back. And now the Qs are a little bit weaker. We'll get there right now. Yes, the QQQ. And look at this. The QQQ went above the trend line resistance. It's still above it. It's gone from 408.71 on the 22nd of November. Here's the head and shoulders, not my favorite pattern. Left side, head right there at 400.99 back in early November, pulls back and then rallies sharply to an all-time high of 408.71 on the 22nd of November, pulls back, makes the right side for the shoulder on that spike to the upside. We actually managed to short that really well, and it pulled back sharply, but we've been using other instruments. If we were just plain short the QQQs, you can't really do that. Well, I suppose you could do that. We could have shorted that. We were using other instruments. Therefore, we were doing really well when it pulled back on a percentage basis, but every time it comes back to even close to the previous price, it diminishes very quickly, the gains. So what we're looking at is that's the second shoulder, left side shoulder, head, right side shoulder, pulls back sharply to 378.90, and now has this very strong gap bounce, and we'll see where this takes us. In the meantime, make it simple. A close below 391 by Monday, this coming Monday, very negative. Not very negative, but it's a negative. It means that there's an arch formation, and you could go back to retest the 378 level. But if there's any move on a pullback, and suddenly you're looking at 401, that would be very good action. And look at the weekly chart. Nothing much to see there. I'm back in a moment. Basil, Chapman, Dow's up 14, S&P's unchanged. We'll be right back.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, I'm back. So I got a bunch of questions and I was about to go to them. I better just go through what we normally do, and that's just go through all the different, everything I'm looking at, and then we can go to the questions. So crude oil right now is up 3 cents at 72.08. It made a low on the continuous contract just 5 days with the market generally, and it made a low on December the 2nd at 62.43, and it's trading $10 higher. That is very good. If it were just $3 or $4 higher and struggling, like a lot of stocks, I'm just going to do this for the moment, like a Roku, which has great earnings and all that, and yesterday you suddenly see a little gap to the upside after making lower lows and lower lows and lower lows and lower lows. You need to see something like today where it follows through strongly. It's up 20 at 236. That makes a difference. But when you're looking at something that has like a natural gas which had an inside day yesterday and making lower lows and gaps down, it hasn't filled the gap today. It tried to get into the gap. It's up 1.29 at 3.837. I had a question. I'll do this now because it pertains to what we're looking at. I would say that the oil and gas area should be trying to find some support for at least a bounce. Now, very often over the years, I've looked at natural gas and crude oil, and I'm always surprised that sometimes they go in opposite directions. You think they'd go together. They don't always do that. In the bigger trend, they might, but on a shorter term basis. So what I'm looking at here is that natural gas is up 1.26 at 3.834. I'm not looking at any contract. This is a continuous contract. That's it. What I am looking at here is I think that it's made some kind of a base on the continuous contract. That'll be the low that was made on the 6th at, if I can see that, 3.630. And it's now trading at 3.83. That's a nice little gain, but it's a very tiny gain when you think that it was at 550 just a week and a half ago. So and the question came in, would you be buying UNG? I took great profits before, and we've been watching it together coming down. Is this a time to get in? And I'm going to say it is a time to do just the barometer test. You're just putting the thermometer under your tongue. Well, they don't do that anymore. You just want to get a feel for how it's participating, because now it's into the gap, the UNG. That's what we're looking at 12.55, up 33 cents. This is not my favorite pattern. It'll become a really good pattern with a silent doji if within, today's Wednesday, If by Friday during my show we're looking at it and it doesn't have to close above it, at least it has to try to fill the gap from the low that was made on December the 3rd, the low of 13.32. Remember, I was being asked about it all that week, and I said, just be careful. It's gone out of the Chapman Wave inside track propellant zone. That's now repellent zone. So you need to see that whole 1360s is going to be an area that how it breaks out above that is important. So I'm just going to say, one, as you know, natural gas has been smoked. I'm being patient as I sold my UNG for profit at the top. I'm now looking for NG play for the future. Thanks for all that you do, Basil. So look, all I'm going to say is this. It's at 12:57. If, as we were speaking now, it was more at the high of the day of 1278 or in the 1268, 1272 area, I say, you know what? I like this. You can more than tiptoe in. I'm just going to say to you, I think from the weekly chart, there's a lot more work to do. But we know that in all the commodities that have to do with weather and other areas that where the price is almost peripheral to about 3 or 4 other major things. You're just watching the price and you say, well, I hope the weather this, or I hope the oil news is good because the political factors, etc. In this particular instance, I'm going to say tiptoe in at 12:59. I personally would have a stop on it. Why? Because if it closed under yesterday's high of 12.54, it's only 6 cents away. If it closed on any 15-minute basis, I probably would say, you know what, I'm kind of out of here. I'd rather be buying higher highs than lower lows. So that's what I'd be doing. So I'm saying tiptoe in. This is not the best pattern yet, but the day is really young. We're not even an hour into the actual trading day, even though natural gas and crude oil have been trading all night. I'm just saying, we're looking at the on-balance volume turning up in a V-shaped pattern. That's the start. The stochastic is lousy at 44%. It needs to go from 4.29 to at least 8% in the next day or so, preferably over 10%. So it's just a start. The MACD's not good. So I'm just saying, I wouldn't get carried away. I'd rather be start my position. And if it starts to move higher, I'd prepare to be able to add at a higher price. And that would have to entail the stochastic not flattening out at 4 or 5%. It needs to get to 6.5%, at least 7%. Okay, so tiptoe in. Now, let's get back to crude oil. What we're looking at in crude oil is that it's holding really well. And this was the day, it's days young in your single leg A up. If there's just a minor pullback, it says good chance that the following session, you're going to take out the high of the previous, in this case, previous day, 73.03. It's a 72.10 right now, up 5 cents, holding very nicely. And the weekly chart has a physical pattern that says at this particular point, if there is a bounce into the 75.60 area or higher, then crude oil has established a base, a low that is a tradable low at 62. So that's the way I'm looking at it just on the shorter term. Now we want to look at, because we're talking about this, I'll go to Coda's question about Halliburton. Exactly the same thing. I like it. And as you know, we did start a second time round. We're trying for a position in one of the oil service stocks. And we just entered. It is up a nice percentage, but it's a very low priced one, so it doesn't have to do much for that. Yes, I like Halliburton is acting well, and I was asked about would I look at Halliburton. First of all, Halliburton trading at 23.71. Symbol is HAL. I think this is acting very nicely after that low. It was just absolutely low lows, low highs, low, and then there's a spike that just takes out all the left side trading for the last 3 weeks or so. That's a good sign, but it says 22.71 is basically the area that must hold on any weakness in Halliburton. Looking good. The weekly chart is okay. Monthly chart is A, B, C, D, E. It just keeps making high. It's a stair-step move with higher highs and higher lows, walking the 9 and 14 period moving averages. So let's see if this can go from 23.71 right now to the 24. Wow, if we can get to that ugly candle of early November between 20.25 and 23 3/4, and that'll be great. So it needs to get to 25.55 by probably Friday or Monday, and holding very nicely. All right. Next question I had was, I know I need to finish here. I want to look at the TLT. TLT, I am calling this a really good chance that this is a peak F and not an F/C at 152.99. It's down $1.07 at 149.93, and that means I've got to look at the TNX.X. That's it. So we've seen a trough. It didn't make a new high. Yes, it did. So this is a brand new leg seen. It failed. Wow, what a weird pattern. So the interest rate, the 10-year is at 1.506. 15.06, up 26 cents. And it's above the 14-period moving average. Yeah, I look at that Coffey. Just has been saying for a while, we're stuck in a range. We're range bound in the yields. Dow's up 37, S&P's up 5.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. Just going back to those Diamondback Energy is in the oil area, oil service area. So this is at $114.17, down $1.41. And the question was, what about? I like it very much. I think it should hold 112 to 110 support in the shorter term. If it takes that out, it says it's going to have to go sideways for a little longer. But it's one of the better looking ones, gone from the under $20 to tested the 118s. Now it's looking at, I just said, if it goes to 118 or 120, just touches that area in the anytime between now and the end of December, That's going to be very good, and that would augur quite well for January. But in the meantime, maybe it's a consolidation. And then the person said, "Oh, I just sold my fan yesterday, looking to re-enter." I'd say that because of this rectangle formation, let's look at it closely. I'd stair step in, since you've just taken profits off. You don't want to just jump back in, so just have a little patience. And I'd say put in one bid at 100 and between 112 and 110, and then we'll look to see where the next bid would come in. If that's the one, and then it starts moving much higher, we'd have to add on a higher basis. But in the meantime, that's what I'd be looking at. But it's acting very well so far. A lot of questions coming in, but I need to finish gold. Gold is trading right now down to at 1782. Look, it's under the 14-period moving average. It's gone back under. It's been under the 9. The 9 is under the 14. That says it's in a sell mode. The MACD is weak. The stochastic's weak. Every rally in the stochastic hasn't produced an equitable rally in the price, and that usually says there's the upside is now limited. There's a cap until it actually breaks. And what I've said is that it needs to close. It needs to close in the 1798 area, and then from that area, really quick, without even looking back, it needs to go straight into the 1806 or higher. And once it can do that, that's going to be very good. But the weekly chart says, you know what? I'm sitting right on the Chapman wave inside track propellant zone. If that doesn't work, it becomes a repellent zone yet again. So I'm just saying, I don't think gold is going to be active just at this moment. It's going to need some trigger point. And I haven't looked at this for ages, but the XLF, if the whole area of the financial starts to deteriorate for some reason, that's where you're going to see money just flow into gold. But until that happens, I think gold is just in a narrow trading band, up and down. You can just intraday trade it. I don't see much there at all. Silver is, when I last looked, silver was a lousy chart formation, but it is making the cluster formation, which says either if it closes under 22, that is bad because it'll go back and retest the September low, back was about 20 or so. And if it's able to hold, it needs very quickly, silver, SI trading at 22.44, down 8 cents today. It's like one move has to just give back days worth of left side action by closing above 22.83, 23.15. If it can close above 23.15 in the next week, that'll be the first sign that I've seen in ages that silver has internal strength rather than too much internal weakness. Okay, now so I did the high grade copper. Woo. At the lower end of the rung, using the 200-period exponential moving as a springboard, it is up 0.02 today at 4.368. All I can say is it's in a rectangle formation. It's trying to make the cup formation. Let's just see it over the next couple of days. I've looked at a couple of the stocks, and they are holding quite nicely in the copper area. But I just have to tell you, it's just been stalling in the lower range for quite some time. What am I missing? Oh, I did the TLT. Let me just go to bonds. Question about bonds. Yeah. So the bonds, I am calling that a peak E. If we break above 164.12, 30 seconds, that's going to be very impressive. But at this point, I think yields are going to be pushing a little higher, and the bonds are going to be pulling back. Look, they broke above the Chapman wave inside track repellent zone. They became a propellant, and now they've given back almost everything. They're back in the zone. So as I say, I think yields are just stuck in a range for now. Now we might start to see slightly higher yields. Next question I had was, radio question. The Tiger. I'm going to go to a whole bunch of questions in the Tiger YouTube in a moment. Hi, Basil. Great show as always. I'm considering buying BIIB. Oh, my goodness. I haven't looked at Biogen in ages. Let me put the chart up. BIIB. And I like your thinking here because the rotation says the whole biotech area had a spectacular move for almost the whole of 2020. Screened up to the high. IBB went to 177.57 August. That was August the 13th week. And then it double topped, and then it plunged down and now it's gone all the way down to, it's trading at 150. It hit a few days ago, it hit 143 something, wasn't it? Yeah, 143.25, and now it's up at 151. So the rotation in the market, if we start to see some weakness over the coming few days, you might start to see fund managers say, okay, what was weak, what was strong, and then took a real drubbing, and you can see the arch formation going from a low to a peak D and all the way back again in the IBB. So now let's go back to the question, is IIB. Biden, terrible chart, spikes on all the Alzheimer drug and crashes on bad news regarding the drug. Thanks, John. So, John, what I'm looking at here is, because it's news related, and if I just took one glance at this monthly chart, I would have said, "Oh my God, this looks like a biotech stock." Even though it's a monthly chart, you usually see this in daily or weeklies. Look, big spikes intra-month and then closes at the low. Big spike, closes at the low. Huge spike going from 250 area all the way to 468 in June of last year. No, June of this year, 2021. Trading a little bit lower today, 227. So this is almost like UNG that I'm looking at, like the natural gas. So I've got a feeling, John, because you've watched it for so long, I'm just guessing because you don't say, but my guess is that you're not looking for just a quick trade, although you'll take a quick trade. You're really looking to say, is this a kind of low that starts a bigger move? And my answer is, it's a kind of low that says there could be a bounce, but usually, unless it's a spectacular news-related trigger that has it spiral up and then continue on a daily chart for 2 or 3 days with big moves to the upside, because the news is so positive. And in this case, it would go from 227 right now to way above 237, would go to the 242 level, and it would do that within a 1 week chart. You're looking at this and saying, wow. So I'm just going to say to you, this is a little bit different. At 227.89, I'm going to tell you that the weekly chart says, yeah, maybe something, but stochastic on a weekly chart at 3%, daily chart at 7%, monthly chart at 17%. This has to have good news. So now I'm going to just say to you, why don't you just get your foot in the door? You just nibble at 227.88, and even this will have a stop. I'll have a 5.2% 2%, a $4 stop on it. And let's look at it again in 2 days. 227.88, nibble, and then we'll talk about it. I'll be back. You can go straight to Bob in Michigan. We'll look at EPV. Bob, I'll be with you in a moment.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Folks, we're back. The Dow's down 44, the S&P's 4. And just wanted to follow up for John. What I mentioned, it was on my mind and I almost forgot, is to say that the Biogen chart is saying that whatever they're working on, and evidently Alzheimer's, one of the things, the success that it's not reflected at all in the chart. There's just something not right there. But as there are many other things there as well. And I'm just saying that I'm staying with what I said. Just nibble there. Don't get too carried away. Just start a position. You can always add to it. Now we're going to go to Bob in Michigan. Thanks for waiting, Bob. How are you?
I'm doing well. How are you, Basil?
I'm well, thank you.
Yes. First of all, thank you. I love the show. You do a great job. But question, my belief, in light of other things that follow as well, that many global stock market indices are in a topping process. Believe more likely maybe early next year things unraveling. But I'm looking at the EPV ETF, 2 times short the European FTSE, to maybe start taking a position.
This is EPV.
Yes.
Yes. Okay. So I've got this up here, and I quickly went to the. So this is the Euro. Why am I missing that? Because I'm writing it and typing an A instead of an E. EPV. So you can see what I've done. I don't know if you can see the chart. It had a very strong move from the low that was made back in November. And this is the ProShares Ultra Short FTSE. So I've got FTSE, but I didn't read it. I thought it would be the FTSE Euro. So that's the title, FTSE, but it's the Euro. So it made a peak C1, C2 double top in the daily chart. It's pulled back quite sharply, but what I did is I grabbed the EWU, which is the British Kingdom. That's the United Kingdom iShares ETF, which doesn't track exactly the FTSE. I used to do the FTSE in all the European markets all the time, but for some reason on TradeStation I've called them. I don't know if they still have it, but I haven't been able to get them. I can get the Nikkei through the futures, but I haven't been able to get the others. Just Nikkei, there it is. So let me just go back to EWU, and what I would say to you is the time frame that we're looking at suggests that the rally that we've just seen in the UK, EW, so EWU is the symbol, trading at 33.11, down 4 cents, has kind of matched the Dow. It actually looks a little bit more like the IWM because it's gone sideways for so long. So how you do this on you would buy it and you'd hold it because it is
I start a position with the plan of probably building it. Again, I more my belief, I think things unraveling next year. But there's another cycle analyst I follow has a DAX and a Wave 5 peak, ideally in mid-November. Hasn't turned down yet, but it appears it's going to. With that being part of, but again, just looking at this as a starter position maybe. But yeah.
So what would you do? It's at 11.57. If it ran up to the 12, fantastic. What would you do if it dropped from 11.57, even though you're talking early next year, and it dropped to the $11 area? Would you still be holding it? Are you planning you're not putting a stop in because your outlook is that at some point there's going to be a sharp drop, and if you're not in it, you don't make it, but you also have to be in it and be prepared to sacrifice because you're not taking your money out until it starts to get much higher than where you entered, and you're just going to hold it. You see, I find that real tricky in the sense that by the time it gets ready to have this major move to the upside, meaning the whole euro aspect starts to see their markets just tank, you could see quite a drawdown. Some people do that. I do that in other areas, but when I'm looking at something that is on my list every day and I'm watching it deteriorate, unless I've shut it off in my mind as if it's insurance for something, I kind of worry about it. If you aren't worried at all, then I would say to you, watch it closely, and I would use the EWU, or you could go to any of the other European, the ETFs. They're not exactly the same. They're very close, but they're not the same. But they'll give you, for instance, I can go to Germany.
What wave count do you see with the EWU? I haven't looked at the EWU. I'm just curious, where do you see that? Like in a monthly?
So if I'm looking, I just grabbed the Germany Dow stock index, and this is the Dow Jones version of the German index, the DAX. So in this case, it looks very similar to the EWU in that it's kind of gone sideways if you're looking at it over the period since April. Let me go back to the EWU. So the reason why I mentioned this to you, the EWU has the look that says it's very similar to the IWM that we were looking at, the Russell 2000. Sure. So there's basically sideways. You know how I talk about a sideways rectangle formation can last a lot longer than your patience. Sure, this is right in that area. So I would actually treat it more as a tradable at this particular time. And as the EWs, let's go back to the EWU, as it's in the lower range, I would not be looking to short. Maybe I'd just wait. But as it gets to the upper range, when the EWU at 33.10 if it does get to the 34 area to 34, between 34 and 34.26, the last high back in June, that's where I'd start to implement the idea of the EPV. Because at this particular...
Is it in a leg D, the EWU, though, from your perspective?
Let me go back to that.
I'm sorry, I'm taking all your time. I apologize.
No. Just which one are you asking about?
Well, I was saying, like I said, I've never looked at the EWU. I was just curious. With the reverse, I know the reverse, it's hard to look from a wave structure. But I was saying
in the weekly chart,
in the monthly chart, is that at a potential leg D already, or
no? It's at a B in the weekly chart, in the monthly chart, and it's made a higher level consolidation. And that consolidation very often likes to go from the lower part of the range to the upper part of the range, and it's so frustrating because you think, oh, now it's going to break out. But a rectangle formation has this way of fooling people. Look at what happened with the IWM. It broke out just for two weekly bars, and then bam, it went all the way back to the low range of 212. That was the low just recently. It was up at 244 just on the 8th of November. So I'm saying to you, I just don't know what you would do if you bought the EPV. I keep forgetting what the EPV. Would you just sit with it, saying I'm prepared to hold it?
I was more so thinking of putting a stop at the low that was in November, which isn't that big of a move here. So that, but it sounds to me I'm early. It sounds like, but yes.
Yeah, and that's the reason we've had such. I was just talking about the VIX. That VIX indicates to me that there's a little bit more buying still to go before we get a deeper sell-off, and even that sell-off now. I don't know if the VIX is. What's going to take the VIX over that? It's going to have to be interest rates or the Fed or something like that. I mean, we've found out that each iteration of this virus is having less of an effect. You know what? I'm going to do a little work on this. I'll try to talk about it tomorrow or Friday on the EPV, but I just don't think you need to rush into it right now.
Very good. Thank you as well for your time. I really appreciate it. Thank you.
Thank you very much for calling. Folks, we'll be back, and then I'm going to go to all those questions that have come up in the Tiger, right there in the Tiger YouTube questions. Some really good questions. I'll be back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. So let's just zip right through this. Cruise. So the question came in here. Hi, Basil. Is Cruise, C-R-U-S, okay to buy? It's in leg A, stochastic MACD positive. What can be an entry point? So this is, remember yesterday, well, for subscribers, remember yesterday, was it yesterday? Yes, I had one that was on my list for a couple of days, and we wanted it, and I waited a day late, and this SIMO, Silicon Motion Tech, just it gapped up, and I did all the homework, everything, and look at the spectacular move, and it went from the 74 area where I wanted it. It's trading at 89 2 days later, 89. So look at that spectacular move. So now we go to Cruise, and this is in an area, flash drives, etc. I think this is kind of the same area, processing solutions, mobile consumer applications. So I like it, and I'm just going to suggest start a position here at 86% because you've been watching it and it's on your list. This could actually pull back quite sharply to 84, but 2 points, 3 points on an $84 stock. I'd give it a 4.5% risk right now, 5% stop, and we'll look at it again tomorrow. Just get your entry in right now. This is on fire because there's a reason for it, and it's had a sustaining move. It's ready for a pullback, but get your first little entry bit right there. Next question is Roku. Yep, Roku is hot. We spoke about that earlier. It had a second gap. Big move up to and holding very nicely. That's acting very well. S&P, yes, must hold 46.28 through Monday. Now, I wouldn't say that it's all over. I'm just saying that's really a key level. If it takes that out, it's just you've got to now start to be very careful. Next question is Apple and Facebook telling us that this market is really just on its way to go even higher? Well, these are very selective, and I have to always give Kramer congratulations for years and years and years of saying, hold Apple, don't trade it, and here it is at all-time highs. Yeah, that's a good sign. I'll do a little more on that, and EPAM is going to be added to the S&P rate. Oh, look at that move. EPAM, this is EPAM Systems. Yep, also looks like these actually. This is a little different because it's being added. Have a wonderful day. I'll do the news report tomorrow, and then you've got Larry. You've got a great program.